Hello everyone, welcome to the Ichimoku and Forex Trading TV Daily FX Market Review for the trading day ending Thursday, July 17th. Firstly to the Euro US dollar, and here we see that momentum that we had to the downside all dry up. Doji candle, or a spinning top type candle, denoting indecision in the market, and little wonder the market interacting with the 135.20 level of previous strong support just below their strong support at 135 as well. And as this new candle is developing, we're seeing the market rejected from below the 135.20 level as well. Very good possibility for a change of trend based on this downtrending price action, the sellers in control, and then them losing that downside momentum and then the indecisiveness. So we will be looking for a potential higher high and higher low. Now if the market does rally and change trend, then we'll be looking at a 135.60 to hold as resistance. And if the market breaks out up above there, strong resistance at the 10% indicator at 135.81. Now this market is bearish in all three time frames, and this solid build of downside momentum may not be as short-lived as we're thinking. If we see the market rally, the sellers come back in, the sellers might be able to build enough momentum to test down below the 135.20 and 135 level of previous support, and that will be a very important occasion if that happens, and we could then see the market develop significantly down to the downside. Moving next to the US dollar Japanese yen, and the sellers coming into the market quite strongly today. That last candle here is currently developing, and we are seeing price action rejected from the 101.17 level of support. For today's trading, we've found support down around that area again, and it has been an important area. So a lot depends on how the market reacts here, and we are seeing buying coming in. Potential resistance at 101.47 at the Tenkan-sen indicator. A bearish market in all three timeframes supported by the Chica span, but this solid support down below extends down to the 100.74 level. If the sellers can build momentum to break it down below there, we could see the market trading lower, but we are seeing the market rally fairly strongly from these areas of support around the 101.17 level. Moving next to the Aussie dollar US dollar, and the candle that has finished trading is this second last candle. A change of trend, so the buyers have come in and taking the market up above the previous high, so showing some commitment to trade the market higher, but then losing commitment around the Tenkan-sen indicator at 93.90. The sellers coming into the market to close the market in a negative manner, whereas the buyers had control the previous day. Today the sellers have taken control, even though we changed the trend to the upside. A black body candle suggesting downside momentum, and at the moment we are seeing the current candle that hasn't finished trading develop as a new change of trend to the downside. Now the problem here is the support at the 93.30 level, and we have the cloud around that level. The interesting thing here, and it's very important here, is that we have a very thin amount of cloud, so the amount of support that we can see here is going to be quite small. So if the sellers can build enough downside momentum, they could significantly change sentiment in this market to the downside, and we haven't seen that for quite some time. So very important next few trading days coming up, and that'll be leading into the next week. So an opportunity there for the sellers, but it doesn't mean that they will do it. At the moment we do still have that support at 93.30 and the close by resistance above the Tenkan-sen at 93.90, extending up to the 94.20 level. Next, moving to the US dollar Swiss franc, and following this strong bullish breakout above the 89.65 level of resistance, today we've seen a spinning top type candle with a black body. So that upside momentum that the buyers had built, has dried up, and the sellers have found some downside momentum, albeit a very small amount. The problem for the sellers here is that they found support at the 89.65 level, and there is an opportunity for the trend to continue to the upside. So no change of trend to the downside at the moment, and a lot will depend on that 89.65 level holding. If the market does trade off, then we have potential support around the top of the cloud, which is actually at 89.44, and around that area that the Tenkan-sen is trading at, so solid support down below. But if the buyers can come back into this market and trade up through the highs of these two candles, we could see the market testing up to the 90 level. Now that 90 level has seen some very strong price rejection to the downside, so we're not too confident in the market breaking out up above that area. But we do have a bullish market in all three time frames here, but the Chico span here is still not supporting that bullishness, and that's probably why we're seeing this indecisiveness enter the market following these two strong bullish trading days.